Hello, everyone. Thanks for watching this Symmetry podcast. I'm here with the management team from JDC Group, Sebastian Grabmaier and Ralph Konrad. Welcome.
Thank you, Andreas.
Yeah, so we do this podcast around the history, the current trajectory of JDC Group, and then of course talk a little bit about the future. Before doing that, I just want to remind everyone that we will have some forward-looking statements. So yeah, please read the disclaimer Symmetry has on the website regarding kind of the risk factors we have in this report. And then also mention that Symmetry is a big investor in JDC as well as Sebastian and Ralph. So have that in mind as well. But yeah, maybe just starting with the background there. Maybe you can each of you tell us who is Sebastian, who is Ralph, how did you get to business, and how do you meet up and decided to become partners back in the days?
Yeah, so thank you, Andreas, for having us. It's a pleasure to be here. Yeah, my name is Sebastian, so co-founder of JDC Group, together with Ralph Konrad. I'm a lawyer by profession, unfortunately. And then Allianz Group made me part of their leadership program that was starting 1999. And so they promote me like 4 times in 2 years when I then changed to a small subsidiary of Deutsche Bank Group. That was the J in the name of JDC. And then, we founded a company as soon as 2002, actually. Married, 4 children, and with JDC and my wife for 23 years. Ralph.
And me.
And you, my second, wife, let's say, partner.
Yeah, I'm Ralph. Happy to be here as well. 54 years, like Sebastian. I'm not married, 3 children, but I know the mother really well, so everything's fine. How did we meet? That was from today's point of view, funny circumstances because in the days I had started my first company. It was a venture capital fund, and I had one investment in a French reverse auction platform for corporate insurance very early in 2000, I think, or 2001. It was 2001, I think, Sebastian. The company didn't go very well, to be honest. And we were looking for additional money for this insurance auction platform. And I met Sebastian, and I tried to convince him that this would be a good investment. And he smiled because he's always kind, but he knew that this platform would not work at all. So this was our first touch point. Yeah.
Yeah, that is true. So the first touch point didn't work, but then it was basically love at second sight when we then merged the companies. So I happen to be the managing director of the J in the name, and then Ralph at that time was just a very new managing director of the D. DMS Deutsche Maklerservice in Hamburg. When we then decided in 2002 to merge the companies, as all of them were too small to live and maybe too big to die. And then we founded what's then was becoming the leading investment platform. So from 2002 and to 2008, we gained more than 10,000 brokers in our investment broker pool because we had this fantastic innovation of consolidating the data in the fund business and then putting it in one piece of paper, which was called the consolidated account statement. So we could take in the data of Fidelity, Franklin Templeton, and also all the German fund companies and calculate the performance across these funds, and then have the first what's now a fund platform, the first basically digital show of the performance over the entire fund portfolio of a customer.
Yeah, and then if I remember correctly, that was listed as Aragon AG. And then, as I remember, it went quite well up until the financial crisis, and then stuff happened there. And if I'm correct, you were also more partners than you two at that point.
Yeah, because in the beginning we thought we needed our own full bank. So we acquired a full banking license in 2005, and to finance this, we went public in 2005, as you said, under the name of Aragon. And that was very successful. Like in the course of the years, we learned that running a full bank is quite some challenge, as you need a lot of capital. And then we decided after Lehman happened in the middle of Lehman crisis to sell the bank off, because we knew that to be a good partner for this big number of intermediaries, you wouldn't need an own full banking license. So we stepped back, and we still have two smaller licenses, a portfolio management license and a broker pool license, and that's quite enough to run our business.
Yeah, what most people don't know is that this bank that's formerly ran under the name BIW, Bank für Investments und Wertpapiere, a really complex name, is now the flatex-de-Giro Bank. It's a German banking license of flatex-de-Giro. That's the bank we founded in 2005. So funny development.
That's been another successful investment of Symmetry.
Yeah, well, good.
Yeah, then maybe just maybe elaborate on how after kind of the financial crisis there you changed your view a little bit to focus on insurance, and then you basically bought out your partners with some debt financing, if I remember correctly.
Yeah.
Yeah, so Lehman just brought quite some change, because in 2008 we were the biggest broker pool, selling 1 billion of funds every year, only to learn that in 2009 nobody in Germany wanted to buy funds. So our new business dropped by 85%. So that was quite cool. And we almost didn't make it. And this is when we decided to turn to the insurance markets, because this obviously is a very boring business where you have a lot of income recurring, as most of these insurance contracts pay year over year at renewal date, or even have a trailer fee, such as in life, where you get some percentage points of the installments that you get in. So we definitely thought that digitization would not stop in the insurance markets, and this market eventually will digitize. And this is what's happening in the last 10 years. And this is why we said, yeah, let's just use all of our experience that we gathered in the investment side and then bring it to the insurance markets. And this is what we did very successfully in the last 10 years. When we did a buyout in 2012-13, we bought the stakes of our partners. That's a small private equity boutique partnership. Bought it out, so on a private leverage base, and then started to develop the platform.
And then was kind of how that early days, I think it was 2015, you officially changed name to JDC Group. So how was kind of that building that insurance part up, like investing in the technology, finding the insurance companies, then finding the brokers? Like I assume that was quite a
There was indeed, from today's point of view, hard days, because we suffered like 5 or 6 years from the investment crisis. The company JDC or Aragon AG was deficit spending. We were developing the IT platform in the insurance segment, and then 2015 was the first time we launched our Alles Meins app, our end customer insurance wallet in the first version, and we had the feeling that this would be a good step to tell everybody, hey, it's new. It's the last decade is over, and now we step into the future, and that's the reason why we decided to change name to the former name, because JDC Group, the company, was founded as JDC Group AG, and then we decided with going public that an acronym is not so suitable, and we decided to rename it to Aragon AG. And so 2015 was not a new name; it was back to the roots. So company was founded as JDC Group AG and is today again JDC Group.
Perfectly. And then in 2019, some new stuff happened there. You personally sold some shares to Great Canada Life there to pay, I think you had some loan that matured there. So maybe can you describe that process and how you actually found such a renewed investor to come into a small German company?
Yeah, so unfortunately, that's the trouble with leverage buyouts that eventually you have to pay back your leverage. So we knew that we had to pay back the debt to this nice insurance company that borrowed the money. And then, yeah, we could. The good thing is that we had a beauty contest and we could choose a new main shareholder. And in this process, we came along Great West Kind of Life, which is like a perfect partner because it's a very big insurance group. So it's top 20 worldwide, what many people do not know. So market leader in Canada, also in Ireland. And but they're run by one big family office, Power Group of Canada. So it's the Desmarais family that still owns 70%. So basically, it's a huge insurance corporation that's basically run like a family office. So a very good long-term partner for us.
Yeah, and the reason why they were interested is, as always, is a question of the acting persons. Some years ago, we helped to restructure a sales group of Talanx. The company was named Claros. It was deficit spending. We bought it, we restructured it, and sold it 10 years ago. And the Talanx manager at this time, then when we did the sale of the shares, was the CEO of Canada Life Europe. So there was a very long, trustful relationship, and as always, it has to fit together, and this was the story behind.
And how active are they now? I think they sit in the supervisory board, right, with one person and kind of, yeah.
Yeah, they're a great partner, and we have a lot of strategic discussions where the market is going to. And I think what you can see in most of continental Europe, that all these insurance companies out there in the markets have quite some heritage in IT systems. So most IT systems are still 30, 35 years old. So consolidation does happen, but it happens on the sales side. So most people buy, and this is what we see in private equity companies buying themselves into commercial brokers, also now private line brokers, is that the big wave of consolidation comes on the distribution side first, and only then might be on the production side. So, and this is why together we have quite a good understanding that it's very worthwhile to be on every point of sale, not only in the broker market, but also in the banking sector, now more and more on the tied agent networks of the insurers themselves. So yeah, it's a very good yeah, common strategy.
And then maybe yeah, the next chapter for JDC was around kind of the COVID crisis, where post that the business really turned on, and then we saw the margins there. They expanded. It was like 1, 2, 3, 4% for some time, like the EBITDA margins, and then the last few years you have started to really see that scale in the business. So was there any specific factor that happened during that time, or was it just like now you reached critical scale, so you could really start to expand margins there?
No, I think COVID was like an accelerator for digitization in the insurance business, insurance sales. We had to move from office to home office within days, and it was not clear if that would work. That was a problem for us as the platform company, but it was a challenge for every single broker. So we had to get used to, and they had to get used to talking to their customers like we do now in video conferencing. The possibilities were there before, Teams, Zoom, and all these things, but the brokers didn't use them. Now they had to use these tools. And what we saw is that with this step, the brokers became much more productive because you have more appointments a day. You don't have to drive to the customer, drink a cup of coffee, drive back. You can schedule not 3 meetings a day, but 8. Yeah. And this was like a productivity boost on the sales side, and we had a lot of effort in optimizing our internal processes, and I think this was the basis for the scale afterwards. Yeah, the economies of scale would have not kicked in that that fast without this COVID experience.
And I think it was also at that point you really started to develop this major customer segment. So you had Albatross a little before that, but then you signed like Finansguru and then later on all the bank assurance deals. So maybe can you describe how that a little pivot there into that kind of segment and how you have been so successfully developing that compared to some of your competitors that still only rely on kind of the old part of the business?
Yeah, there's a lot of pressure coming of all these demands of developing IT and also by regulation, obviously, right? And it's only the biggest of all the market participant can really shoulder all these challenges. And then obviously it's not the easiest to develop a functioning platform that combines all the data of all the product providers on one side and all the intermediaries on the other side. And we could see that out of these competitors at that time, now there's only three that really have a good chance to have a market position. JDC being the pole position with their tech stack. So we did develop early in digitization, and we started the first app. There was a lot of competitors making jokes, about why would you need an app in insurance distribution? But now, as we have the most advanced app, the laughing stopped, and now they try to catch up in their developments. The first milestone client that we could achieve is Lufthansa as a broker Albatross that had a tender for a platform for their 120,000 employees, and that was about 360,000 insurance contracts. And that was the first time in German insurance history that such a bulk of contracts were transferred to an external provider. And this was basically the starting point for our major customer business, where in the wake, a lot of first the big corporate brokers, also BMW, Volkswagen, Böhringer, and then the banks started to look for a platform. And we could win all the first 10 or 15 pitches and tenders, and were always first, and therefore could establish this institutional sales base where no matter whether it's the public insurers behind the savings banks, the R&V insurance behind the cooperative banks, and also now the tied agent networks of the big insurers, Gotha, Barmenia, but also Allianz, as they were looking for a platform, we could always win the very big contracts that had a lot of opportunity for the near future.
Well, yeah, I mean, I think it was 2021 you signed the deal with Provincial there to big excitement for the market and for you guys. And later on, you did basically all of the other big banking networks in Germany. So I think initially you were quite clear with the market that this will take time. Like this is not like this is German banks; they don't move that fast. So you should not have too high short-term expectations. But now that it has basically been 4 years since the Provincial was signed, and maybe like 2 years since it started launching, how would you say it's progressing? Is it slower or faster, or according to your initial expectations? And then maybe with the later deals as well, that you think the fit in the market is still there?
Do you want to answer, Sebastian?
Well, it depends. So obviously, it's a number of partners out there. So for the international listeners, it's the German savings banks, and there's 370 savings banks institutions out there in the market with 50 million customers. So out of 83 million Germans, almost 2/3 are a savings bank's customer, and they own a number of public insurers, and the big ones being Versicherungskammer Bayern, VKB, that's one of our shareholders now, Provincial, that's one of our shareholders now, and then a number of smaller ones, Sparkassenversicherung, SV, and then VGH, Public Brunswick, that are all our customers, and then we roll out the platform over these 300 plus savings banks now. And there's some that develop quite nicely. For example, the partnership with Provincial is really developing even better as to plan. So we have achieved the first 150,000 customers that are coming from the savings banks that's Western Germany, the Cologne, Düsseldorf area. And but then there's two others, VKB and SV, that could be a little bit faster, to be honest. But eventually, as they're all using the same tech stack, so they have their own company that promotes their own servicing app for the end clients. So we are very confident that this also is catching up now.
And would you say what's kind of the bottleneck to get it fast? Is it just like the internal processes within the banks, or kind of like training the people, or like is it just basically sentiment of the individual banks?
Andreas, it's not only technology. These big projects need like a year or so for the technical data protection, legal ramp up. But then it works technically, but nobody uses it. You have then to train the people, and it's like a marathon. And your question was slower or faster than expected or like expected. In total, of course, slower than expected. That's the bad news. But the good news is that we managed our growth goals nevertheless. So we have a lot of opportunities, and they will work. But it takes longer than initially expected some years ago. But the big turnover is still in front of us. So that's my takeaway from there.
And would you say that at some point it's also it becomes like an urgency for the banks, because if they don't accelerate this process, then the end customers go to somewhere else. They go to Finansguru or to a direct line. So at some point they have to step it up.
That's what we see. There are a lot of discussions now around Finansguru. When we met them, they were two young guys, and we met them in a shared office where we had one bureau, and they had one bureau. That was the very early beginning, and today they are very, very successful. Already more than 500,000 contracts as Finansguru, which is still very young company, very fast growing. And we know that insurance companies are looking at this, banks are looking at this, and they are trying to shape their strategy because they see that the market is changing. So there will be urgency.
Yeah, and we have this role model of the investment markets, right? So 20 years ago, the same happened in the investment world, that the market was very fragmented, and also the platforms were fragmented. So everybody had a number of funds, and there was the shares were sitting at the individual fund companies. And what's happening in the last 20 years was that now a customer has one or on a maximum two like platforms or banking depots where he's gathering all the funds that he owns, right? So in any the customer expectation that any bank has a shop with all the very famous fund companies in the world, and it's not only that Deutsche Bank has TWS funds and maybe Commerzbank has Allianz funds, right? So, and this is now happening in the insurance industry, that at the point of sale, the customer is expecting to get all the data of his insurance business. And then it's now the question, what sales channel is fastest? So the brokers had a head start, basically. But as to demographic reasons, maybe, or because they didn't adapt that well, now the banks and also the tied agent networks of the insurance companies have this very big chance to be the entry point for the normal consumers into the insurance world, and then also consolidate all the data that's out there in the insurance industry.
Yeah. And how would you say that? I think that's quite of the unique with the JDC platform, that if I look here in Denmark, like most people, they will go to have one insurance company and say, like, oh, can you provide all the needs for me? And then if you change insurance company, you put all your contracts with another insurer because they give you this like bundling percentage discount and those. But I think in Germany, maybe you can explain to the viewers that it's a different mechanic where you have like 6-8 different carriers. So you need that aggregated view if you want to see all your needs and those things.
Yeah, so an average household in Germany owns 11 to 12 insurance policies, and normally has about 6 to 7 different insurance companies and entry points, and also 6 different sales partners, brokers, travel agents, sometimes the banking partner, and this is now consolidating because normally you want to like to have, same as in the fund world, you would like to have a 360-degree view on all of your insurance policies to really see where is a double or triple insurance and where is maybe a gap in my insurance cover. And this I can only see if I gather all the data at one point in one portal, and then I can do or give also a good advice over the entire portfolio. So now this paradigm change happens away from selling as individual product to a real advice on the entire insurance position and risk position of an individual household. And we are happy to be the driver for this paradigm change in the market.
Because I think there are some reasons why the German market is so different to the rest of the world. First is that Germans are very risk averse. They like to be insured against or for everything. And the second is for this reason, we have hundreds of insurance companies in Germany. There are more than 200 insurance companies in Germany, and they have different sales channels. They have their tied agents, they have direct sales via their websites, but there's also a big banking line and a big broker line. That's our business. And now these lines are merging because the JDC platform is used in the broker business. It's also used in the banking business. It's used by the insurers directly. And that's why we think we have very good opportunities because we can grow into all the sales channels with the service that we deliver.
Yeah, and kind of the view you provide to the end customer is really kind of the future of insurance, like comparatively actually to what we do in Denmark. We're only one carrier here because I assume it's a little like in the investment business. You want like Fidelity for emerging markets, then you want Allianz for US tech because you want to be able to pick and play the best in different niches. Yeah. Because all insurance companies cannot be the best in car and house and pet, and so it's actually the future of insurance should be this aggregated view that you provide there.
Yeah, that's a very good comment. And also with Morgen, we're owning one of the leading comparison toolboxes. So, so one of the 3 leading comparison tool companies is also a part of the JDC Group.
Yeah, makes total sense. Then maybe on the management team there, you guys are still kind of the CEO and CFO, and you just signed a new contract to be able to work at least five more years. So that's good. But maybe elaborate on the rest of the team. So you took Marcus Rexin as kind of I can't remember he's head of sales, or what's his title.
Yes.
And then Ramona Evans as the CEO. So those were kind of 2 what you could call high caliber additions to the team there.
So
one for Sebastian and one for me.
Yeah. So as Ralf said, we are now 54 years old, so we have some management time to go. That's a positive, but so we have a backup in time, basically, right? And as Ralf said, Marcus, he was the head of the insurance business within Hyperport, so a very good addition to the management team, as he's running all the sales and marketing departments within the group, and basically, could jump in with all exterior contacts. And same Ramona as the Chief Operating Officer now. She was heading the P&C business within Check24. That's the market leading consumer platform here in Germany. So all Germans know it because they have a lot of advertising in the halftime of all soccer games. So it's a very good addition to the management team, and obviously there is a good second level of managers that joined the company 15-20 years ago that are basically like the operative managers and workhorses in the company. So I think from that perspective, it's a well-run team.
Yeah, we're very happy with the development because the company get bigger and bigger and more complex, and we needed more intellectual input from outside and more shoulders to bear all the tasks. So yeah, and especially what's interesting, it was an incident, but we hired Ramona, and at this time we had no clue that we would maybe could buy a company like FMK, which is exactly the experience of Ramona within Check24. So that's a very good development.
Yeah. Yeah, then actually that's a good fit to the next question. I had to move into M&A. That has been quite a good contributor to kind of the growth. You've both been buying like small companies that could fit in, but then we'll have three major acquisitions, so to say. The first was Morton & Morton there. Can you maybe describe that acquisition, how that helped you kind of improve your tech stack and how that has basically developed since that acquisition?
Yeah. Maybe at first, Sebastian, sorry, maybe at first, I think that M&A in our business is more successful compared to other industries, because the business models that we and our competitors, or the bigger and the smaller, have, they are very, very similar. We have a contract with Allianz. They have a contract with Allianz. We have an IT platform doing the exact processes faster and better than the smaller ones. So when we buy a smaller competitor, then we can merge this and just switch off one operation. If you do the same in a production industry, you cannot cancel one plant immediately. So and that's the reason why we were able to achieve these synergies in a very short time. For instance, one smaller transaction that we made was a com investment years ago, 6 million euros of turnover. Today we still have the 6 million euros of turnover, but we only have 1.5 employees left from this company because it's completely integrated into our platform. And when we buy the companies, compared to 3, 4, 5 years later, there's a big lift in profitability because of the synergies.
Yeah, maybe there's two groups of acquisitions. One is, as Ralph pointed out, like small platforms and other broker pools, brokers such as Cominvest or Top 10 that we acquired 2 years ago. So just bring more volume to the same business model. And then there is some acquisitions that expand the business model a little bit. Morgan One was one of these examples. It was a purely strategic move, as there is a scarce resource in comparison tools, and it wasn't sure at that time in the market. If not, the main competition is on the software comparison tool side, part of the market, and not on the volume and transaction side. And this is why all these comparison tool providers were bought by bigger companies. So we were happy to acquire this strategic position. But on top, we now have the deepest data source, because Morgan Morgan is basically a completely data-driven company. They collected the contract data of the last 20 years of the German insurance market. And now if you look forward into use of AI tools and AI agents, that is basically the fuel we need for further development of the platform. So there's about 40 data analysts together with about 20 IT specialists that really provide data for the German market, and it's a perfect base for our future development. And this is also what enables us now. We just launched the first contract comparison. So with every we might maybe talk more about this 360-degree view on the customer portfolio, but on top, he gets a comparison product for any product. So we tell him if he has a very old product that he maybe bought 15 years ago, it just has about 15 to 30% of the performance of a modern contract, also of the same insurance carrier. So what we can offer him is that just by 2 clicks, he can change this old product into a new one and gain whatever 30, 40, 50% in performance. And if he adds a couple of euros, he might even get like 80% performance plus. And then this is another like innovation that's topping up our service. Is there is a full AI agent that helps you answering all the insurance questions you might have. Like if like a normal question of a customer is, can I borrow my car to my son who's going to France and he's like then whatever delivering some piece of furniture there and all questions around would take about uh, almost a day if you have this as a question to a broker and then the broker asks the insurance company and then the line goes back and now it's done within seconds as these AI agent can cope with these questions. So this is a very strategic long-term acquisition that will pay out big time in the future, but not as immediate as the platform companies we bought in the past.
Yeah, and I think that's also quite unique for you guys because you have the contracts in the platform to help like do this price comparison. Because I think sometimes the issue if I go on a price comparison website, it's not really comparing apples to apples. You're kind of like, oh, how long do you drive? What car do you have? Like, what kind of like self-financing do you want? But you can actually, because you have the whole contract and all the terms, you can actually do a really, really good like direct comparison to a different carrier.
Yeah, that's a very important point, Andreas, because then the comparison only makes sense if we really compare the conditions on top, right? Not only the price, but then, for example, for a simple liability insurance, right? So it's not only about the liability cover, whether it's 1 million, 3, 5, 10, or 50, but it's is my wife insured, are my children insured, is the babysitter insured, is the neighbor insured if he watches the children. So there's a lot of like questions that are important if you take out this insurance policy, and this is all done automatically, basically, because the individual data of you as a client are sitting in our platform, and then you can compare the products that are fitting to your individual risk appetite. So that's very important at that point.
Okay, then maybe moving on to the top 10 acquisitions. That seems has to been quite successful for you, both because you paid a low price and it's been developed nicely afterwards. I think some people was a little like skeptic when you bought it, say, why do we want to double down on the financial business instead of moving more into insurance? But can you maybe elaborate how that acquisition has went, and then maybe why it's still good for you to have that split between both insurance and funds, basically?
Maybe I can pick the question regarding the integration. The integration is done. We're ready. The companies of the top 10 group in the meantime are merged onto the JDC companies. And I think EBITDA contribution is above 1.5 million. And the purchase price was, we published that was 7.5, but a company didn't have any debt, but 2.5 million cash. So very profitable for us from today's point of view, like 3.5 times EBITDA. 80% recurring revenues, and on top we had some tech stack that we bought with the top 10 group, which we didn't have before. So from this side, everything's fine, Sebastian.
Yeah, and the other part of your question was how come coming from the investment industry, moving into the insurance industry, being one of the market leaders, why take a step back in the investment industry? So the markets change, right? And there's some conversion in these historically quite separated markets, investment and investment regulated markets on one side, and then insurance regulated market on the other side. For the customer, it's not that important whether he invests in a unit-linked insurance product or in an umbrella fund or fund product or in a managed account or portfolio management product. So it's also always dependent on the individual situation of the consumer. And but from the sales process, it's more or less the same point of sales and also the same process of sales. And what we can see now, it's there's a lot of interest coming back also to the fund markets and especially portfolio management products. So it does make sense now as the margins are similar and also the earnings potential is similar. So and it's very often the same group of brokers selling both insurance and investment. So this will belong more and more together, right? So in Anglo-American markets, very often it's just basically the same provider. And yeah, so we are happy that now we have quite a good business mix. About 1/3 is investment now, and almost 2/3 are insurance. So it's also a good mirror of the market in Germany.
And really, investment is really in a good business to be in. It's just slightly more volatile, so it's good to have that kind of business mix there. Yeah.
Yeah. After 10 years of increasing markets, that's a good comment. Yes. We will have some tears maybe when we see some decrease. Let's see. Yeah.
Then before moving into the really interesting FMK deal there, maybe we can just elaborate on Summitas a little bit, for people to understand how that went by and how that's going, and yeah, it's becoming quite a big business now.
Yeah, so there is now a big buying frenzy for commercial brokers also in Germany. As you might know, the US markets are quite consolidated. The big private equity companies bought more than 80% of all brokers. Same happened in the UK, then in the Dutch market, and now about 50% of all bigger commercial brokers above 1 million euro in revenue are bought or in the process to be bought by international private equity companies. And this is when Bain Capital went up to us and said, "Can we not buy you as a platform and then consolidate the market?" We said, "Well, at the prices then 2 years ago, we couldn't see it, but we said, let's not lose time, but have a joint venture company." That's the company now with the name of Summitas. We bought 18 brokers in the last 18 months, now achieving about 60 million in turnover and also more than 20 million EBITDA. So it's a quite successful company that brings us, and this is why we did it, the advantage that as they use our platform, we will earn more than 1.5 million. I think this year roughly 1.65 or something million in earnings that is just coming out of this joint venture company. So for us, a good addition to the platform strategy, but also a small private equity side play where we also can invest some money and maybe get some more out of it than we put in.
And is that market becoming more saturated, more competitive, or is it loosening up a little bit? And how do you see the prospect for more M&A there?
Yeah, I think it's close to climax to the climax. So the multiples for these brokers, as they were, in the course of this buying period, went up quite significantly. So many brokers are now bought at more than 18 times of their EBITDA. So it's quite hot. So all these aggregators, they sell at between 20 and 40 times. So that's quite ambitious. So it's good market to be in, as there is still a lot of private equity companies on the sidelines that are looking for a market entry in Germany. So, and with the combination of volume, obviously, and platform, Summitas is a good play.
Yeah. And at some point, I assume that Bain wants to monetize this as well. So let's say 20 million EBITDA times whatever multiple you can get as a platform. It will be quite a good investment for JDC when you exit it at some point.
Yeah, that's
then of course the important part is to sell to someone that still want to use the IT stack.
That's a plan.
Yeah. Then maybe
because we need a lot of money, to pay all our growth ideas in the future.
But that's an important point. So the good thing is, obviously, the platform is paid for, and there is a liquidity coming out of it, obviously. So the luxury problem is rather where to invest next, and that goes into to M&A. But the platform, that's a good thing. It's all reflected in the P&L, and there's no additional capex needed for developing the platform.
Exactly. And then maybe we move on to FMK. There was like an extremely interesting deal you did there. I think it was like 6 months ago, and a few months ago since it was consolidated, or you closed it. So maybe can you just take the highlight again, why this is so important for you to have that kind of digital presence to get the leads and help your brokers basically.
So the good part about our B2B2C system is that obviously the customers come for free because they are brought by or introduced by our very big intermediaries. But the little bit downside, the flip side of the coin is that obviously we're dependent on the speed of these very big institutions. As we discussed earlier, some are in plan, but some are moving a little bit slower. And obviously to find more volume to the platform, using brokers, all other intermediaries, banks is a good thing. But now with the acquisition of FMK, we receive another 480,000 new customers every year to the platform. And that's very convincing for us because now it's an own lever for our growth that we now can decide upon ourselves and are not dependent on our B2B partners anymore. And that's the main reason why this acquisition is so attractive for us. And maybe Ralph, we can elaborate more why especially FMK has such a good access to the German markets.
Yeah, but another thought on the market development and FMK. Andreas, the brokers are old, on average 55 years old, and according to a McKinsey study, they are aging by 3.5 years every 4 years. Yeah. So we know that we have an aging problem in the broker market. That gives a lot of opportunity if you look at the end of the aging pyramid, because you can buy the portfolios of the brokers that want to retire, very profitable. Yeah. But you have a lack of new brokers, of new business, of younger people coming into the market. And FMK for us will be one of the big tools to generate a turnover with younger customers. Yeah. And attracting younger brokers because we deliver them the customers, not for free, of course, nothing is for free, but we will enable them with a technology platform and with the customer access to be successful in this broker space. And so that's I think it's a very good step for us, but it's also a necessary step for the industries because we have this broker aging problem in Germany.
Yeah. And then maybe with FMK, I think you closed it in mid-September, right?
So we are a shareholder since 5 weeks now.
Yeah. Will you consolidate some in Q3, or would it be only from 1st of
September? September will be the first month of consolidation.
1 month in Q2.
1 month, yeah.
Okay. And then, it's a little early to ask, like 2 months since you announced it and 1 month since you closed, but what's your kind of initial kind of response to how integration? I assume there's not a lot of integration because it's like they only had a few people there, but it's more like how kind of the integration of the tech stack, the cross-selling, those kind of things are.
Yeah. It's very early to answer these questions. That's right. But you get a feeling when you start to work together, and we are very happy with the guys. They are very fast, very clever, and we have the same view on let's say priorities. At first, we will focus on the products that on the leads that we generate and sell it for one-off to third-party customers. We try to do them on our own platform. For instance, for pet insurance, it's better to get 150 euros a year instead of 120 euro as a one-timer. Yeah. And this is how we look at the FMK, and there's let's say 20 tasks that are defined and that we will develop until the end of the year. And I'm very convinced that we will see the first effects in this year, and next year we will see relevant effects that we can show you in the P&L.
Yeah. How's the response been from kind of both the Phenom sales team, maybe some of your other B2B partners around this deal? Have they been like skeptic around, okay, now JDC will become a competitor? Or has there more been like, okay, wow, this is really amazing because they can help us with leads? And
the latter. So the feedback is very positive because there's 2 ways you can pay your broker or agent. One is obviously commission, but the other is access to the markets. And we guess that FMK can provide about 2 million in leads, and if they only have almost 500,000 new customers, that means there's 1.5 million leads that we can auction off to our brokers and tied agents. So that's a huge impact on the new business side. So if we just can sell up or cross 10 to 15% of the customers that sign anyways, we can enhance our new business by 50%. And this also helps the brokers, and in the midterm, we think that even brings more brokers to the platform in the future. And this is why we have this threefold strategy. One is to improve the earning structure of FMK itself by moving the business more from one-offs to recurring income. The second is to use as many of these existing customers or newly generated customers and upsell, cross-sell them by own service departments, such as call centers. And the third is to now develop a auction platform to auction off the leads to the existing brokers. And that's, as I said, very exciting for the brokers that are on the platform.
Yeah. And then, I think the other part with the FMK deal was kind of the smart one, that you didn't have to do any dilution there. Like, of course, like you basically double your EBITDA close to without any diluting the shareholder. So maybe just a few talks around kind of the financing structure and how that really will help benefit the earnings per share base of JDC.
Yeah, indeed, we use the structure of a Nordic bond to finance this transaction. Not very common as a M&A finance, but for us it was possible because we had this smaller German Mittelstandsbond since 2015, and we were, let's say, member of community, good image. We always paid in time, and the bond was for years above 100%. So this was a good story, and for the bond investor, we were very attractive because net leverage was nil, and 80 to 85% recurring and reoccurring revenues. Net leverage after transaction, after integration of FMK was still very little compared to other bond transactions, and so it was very fast. It was clear that this could work, but to be honest, I did not expect that it would work so well because the demand was incredible, and at the end we could negotiate an interest margin which is very, very good for an M&A finance, because we now pay Euribor plus 450 basis points, and normal M&A finance is more 10, like 5%. So we're very, very happy with this development, and as a shareholder, of course, it's good to not to have any dilution.
Yeah, for sure.
At this point, thank you again for all the Scandinavian and Danish investors and creditors. It's a great market. So
it definitely is. So only two important questions I actually have left here. The first one is around kind of the mode, and the next one is around kind of the future for JDC. So maybe just the mode around your business. I think that's something some investors they misunderstand, how hard it is to replicate what you've been building, both the technology stack, but also all the connections, deals, the OPEX, the systems, everything running around that. Can maybe just take a view about how hard it would be for someone to come, even if I had like 500 million euros, say I want to compete with JDC, how hard would it be to do that?
Yes. So as you see in our history, right, it took more than 10 years to really develop a platform and have a product that's well received in the markets. And then it's not about the product, but also these hundreds of interfaces and contracts and agreements you need to all of the market participants in the insurance and the fund industry, but on the other side, to this big number of market participants on the intermediary side. So it's very, very, very hard and takes a lot of money and a long time before you can enter into competition. And then what you see today is like these three companies that made it, right? But and there's still about 15 others out there that are still there, but will be bought or will be merged into, and then you don't see all of them that failed. So there's a lot of also on this way on our last 20 years, a lot of companies and also some big insurance companies that failed many and oftentimes sometimes to develop this kind of platform. So we are very, very relaxed on new companies that plan to enter. It's almost prohibitive, Ralph.
Yeah, I would answer very clear. It's not possible to replicate because it's way too expensive, and it takes too much time. And you can see if you follow the money in our industry, then private equity companies, they buy the big ones like JDC, and there's no money like venture capital money to build up a new platform because it doesn't make any sense. So at the end, it's clear that the 3 or 4 of the big ones, they will be at the end, they will have the market.
Yeah, I think one thing I actually started to appreciate, I think back in 2020 or 21 when I did the big research before buying my stake in JDC, was kind of like, first I was a little like turned off by all those like manual processes that is behind it, because between the insurance companies and you. But then I actually started to understand how big advantage that was, because if all the insurance companies had one basically common API, everyone could just plug into that. But I think now with all the different tech stacks, all the integrations you have there and different processes you have to be aware of to have those 200 connections, it's quite a big moat for you. Yeah.
Yeah, that's a very good point, Andreas. And the beauty for us and our model is this will not happen in the near future also, right? So in the next 10 years, there will not be a common data standard of all insurance companies in Germany, or even like there's a EU initiative, FIDA, that dreams of common data standards in Europe. This will not happen in the next 10 years. And even like the small plans of starting data standardization, they just miserably fail because these old heritage systems of these big insurers, they take about 8 to 10 years for an exchange, and many insurance companies haven't even started yet. So we already know for the next 10 years there will be platform companies and data standardization companies such as JDC that are very necessary for the markets to fulfill the needs of the consumers, right? And this is why also we think it's just prohibitive that there's a new miraculous market entrant that can disrupt the market or change the market in a big step. This will not happen. On the other hand, it's rather the contrary. It's company like JDC that now can really shape the markets.
I think Germany is also really relationship based. You have built like 20 years building both GDC as a brand and kind of then the relationships you and Ralph has. And so even if I could develop some tech, if I just call Allianz and say like, I'm 2 young Danish guys, can we work together? I would just like, no, shut the door. And like, you can, that it takes time to build that as well, like especially in Germany.
Absolutely. It's a full-time job to only manage all the sales contracts to these 200 insurance companies. We have 2 people doing nothing else like this.
Yeah, exactly. It's crazy. And then I think maybe the last big question is moving kind of to the future, how GDC will look like 5-10 years from now. I still think it's quite underappreciated what you have done here. I think just before I bought the stock, it was like 4 million euro EBITDA, and next year or no later than 27, it will be plus 40. So it's like 10x the EBITDA in just a few years, and plus 40 EBITDA, and the market cap of the stock is 400 now. So it's trading at 10 times EBITDA or something. It's like quite insane. So maybe elaborate on how you see the future there. I think you put the guidance there out there, but you only have 2% market share now, and competitors in other industries have double digits.
Yeah, that's a good point.
At first, thank you for the compliment, Andreas, and happy for you that you were one of the early birds, and you invested for your investors at an EBITDA of 4 million euros. Indeed, the last years went very well.
Yeah, but saying this, right, we're still at the beginning, right? We just reached inflection points. We see now that the platform is scaling up, and as you said, our market share is still incredibly low. It's rather depends what for figures you take. It's between 0.8 and 0.9, right? So we have 2.9 million out of 488 million contracts out there, and about 1.45 billion out of 220 billion in premium that's on our platform. So there's still a long way to go until we reach a ceiling. So we think that we are not only growing, but growth is growing, and therefore earnings growth is even higher than or will be higher than the revenue growth for a long time now. And after having entered entered into all these very big contracts that by themselves, each of these contracts with the public insurers, with these big number of savings banks can bring up to 50 to 100 million commission alone. So there is a long way of growth in front of us. And we just see that, our midterm targets that we put out that by 2030 at the latest, we'll be at 500 million turnover, now coming now from maybe 270 this year. So almost doubling in the next 4 years. And then also our revenue will be more than 50 million EBITDA. So we are just now picking up speed. And there's a long growth period ahead.
Yeah. And I think also it's quite predictive how the growth comes to you, because it's of course you don't know if we will grow organic 12% or 18 next year, but you kind of it's so normally in that range, and you just can kind of predict it quite fairly consistently out there. And I think that's probably quite underappreciated by.
It's always good to do the backward test. When we issued the bond, we did some work around our equity story with the investment bank, and they just looked at the last 10 years. Yeah? And the last 10 years, we were able to have a revenue CAGR of, I don't know, remember exactly, 12, 13, 15%, and EBITDA CAGR was 30% over 10 years, year over year over year over year. Yeah? And that's backward looking, really convincing, and I cannot find a reason why it shouldn't go ahead. Yeah. So of course it will be a question how successful will be the development, but there's no reason why there should be a curve or something like this.
No, exactly. That's quite impressive. And then maybe just on the M&A market, you did FMK, so probably you have some earn-outs to pay at some point and some put options to pay at some point. But do you think you are like done now, or you focus more on like rolling up the smaller brokers, or is there anything large you could still do, or like how do you see that market?
Well, as we said, right now we are big, we are growing fast, we're very profitable, and there's a number of companies out there that are small, not growing, and not profitable, right? So what does it mean is that there's a pool of like 15 platform companies, smaller broker pools, bigger brokers that will be bought in the next year. So there's a lot of M&A opportunity out there in the market, and we will always look closely whether this is a good fit. But if we see perfect fits, we will definitely buy more.
Yeah,
but it's not necessary. That's important. We don't need additional acquisitions to fulfill our plans.
Yeah.
Yes. So we can just very boringly grow 15% revenue and maybe 25, 30% in EBITDA year over year over year to reach our targets. But then obviously we can have shortcuts to growth. And FMK is a very good example where we just add whatever 12, 13, maybe up to 15 million EBITDA. That really helps to achieve our growth goals.
And then at some point, what could you see as kind of the end goal? Would it be to have kind of the hyperport for insurance, kind of have double-digit market size and be just that aggregator of the whole insurance market and take a cut of that and like really become that big multi-billion euro business? Or
Yeah, well, in developed platform markets, if you look at the fund business in UK, Fidelity has a market share of more than 30%, or Schwab, US. So it's huge markets, huge market shares. And we are in the pole position to be one of the dominant players. And then it doesn't really matter whether there's 2 or 3 other platforms out there. But it will definitely have the chance to have a double-digit market share. And this means that we can more than grow the company more than 10 times. This will be happening at a very high probability.
Yeah. And then when you become a bigger company, I think you're 400 million market cap now, and at least in my opinion, you deserve a much higher market cap. Then you would get like more institutional investors from different countries. You could maybe uplist to a larger stock exchange or the main listing in Frankfurt. Or how do you see that kind of process working around that?
Yeah, we're discussing this already since a year or so. In the past, there were no advantages.
Yeah.
But now maybe the time has come to think about this more intensively. It costs a lot of money, and there's a lot of work to do. We need a prospectus and so on and so on. You have to shape the supervisory board and additional reporting. but nothing that is not doable. So yeah, if you stay with us, you will see how it develops.
Yeah.
No, we do appreciate all these like smaller, also mid cap or mid-sized investors of the past, right? So Andreas, you're a very good example of one of our longest relationship within a very committed investor. But now also when we are on roadshows, we see all these very big names already, and for them until now we were a little bit too small, but now we have at least the interest of these very big fund companies worldwide, and that's very encouraging for us that we are on the right way.
Yeah. Is there anything else? I think now we're rolling up the time here, but is there anything else that either of you want to kind of share to the listeners that's important around JDC or the future, or have we covered basically most of the things now?
Yeah, I think we have covered the most important topics, and just to put it in a nutshell, right? So it's one of the last big chances for a industry that is digitizing, and it's a little bit copy and paste. You could see the effects, what's happened in the private retail market, what in Amazon did to the markets in retail sales, or like these big fund platforms like Fidelity or Schwab to the financial markets. So we have this once in a lifetime chance to basically live in this digitization phase of one of the very big industries. So insurance industries is more than 6% of German GDP. So it's a big industry in here. And to have also like a Europe-wide rollout in digitization. And as we said, right, coming from this very small market share, there is a long growth period ahead for us. And we'll see that year over year, we will execute on these big contracts and also on our growth path. And eventually, this will be a very fantastic company.
Yeah, and maybe on a personal view, we are in the company for 20 years now, 22 years. But as you said, we decided for 5 more years, and there's some, let's say, some energy and fuel left, to go the next step, and the next step, of course, should be a market cap of 1 billion, and that's the goal, and not in 7, 8, or 10 years. That's the goal, to reach this billion as soon as possible. So that's what we discussed, Sebastian and I discussed before signing the contract for the next 5 years, that this should be our goal to reach. Otherwise, maybe one of us would not have signed the contract.
Yeah. Okay, perfect. I would round up then, but thanks for contributing to this podcast, and we would share it within the next few days on the website.
Thanks,
Thank you much, Andreas.